Hello, welcome to Lyra. I'm Chamindar Uncle, a BSc graduate in Financial Management, and I'm thrilled to have you here today. Our mission is to empower you in the world of stock trading by sharing knowledge from both academic backgrounds and hands on trading experience. Today, we will delve deeper in Bollinger Bands, a versatile tool in technical analysis that helps traders assess market volatility and identify potential trading opportunities. Bollinger Band consists of three lines: simple moving average, middle line, and two standard deviation lines, upper and lower bands, plotted above and below the moving average. These bands expand and contraction based on market volatility, provide insight into price movements. Traders often use Bollinger Bands to identify overbought and oversold conditions. When the price touches the upper band, and it may indicate an overbought condition, suggesting a potential selling opportunity. Conversely, when the price touches the lower band, it may indicate an oversold condition, suggesting a potential buying opportunity. However, it is essential to use Bollinger Bands in conjunction with other indicators to confirm signals and avoid false readings. Strategy number 1: Bollinger Bands Mean Reversion. The Bollinger Band mean reversion strategy is a quantitative trading approach that capitalizes on the statistical tendency of price to revert to their mean over time. This strategy involves taking positions when price deviates significantly from the moving average, anticipating a reversal toward the mean. Now I have brought you a chart clearly mentioned mean reversion points. Here, this is a mean reversion point. That means from this point, it is reversed to the mean. From this standard deviation point, again it's reversed to this point and gone down to this, and once it touches this thing, again come back to the mean as a reversion, and on this mean it's traveling again, it goes down and again to the mean, and with the lower line it is coming down and turning to the mean. These are the reversion points. The key components. The Bollinger Band structure, as I told you earlier, middle band, a simple moving average over a specific period. Upper and lower bands calculated by adding and subtracting a multiple of the standard deviation to the middle band respectively. Mean reversion principle. Price tend to oscillate around the mean moving average. Significant deviation from the mean are often followed by a reversal back toward it. Now in this chart you can see upper band, middle band and the lower band, and the reversions also. This point, this point, this point, this point, and these all points are reversion points. Now we are to trading signals. There are two types of signals, one buying signal, the other selling signal. When the price crosses below the lower Bollinger Band, it indicates an oversold condition, suggesting a potential buying opportunity. And in the other word, selling signal. When the price crosses above the upper Bollinger Band, it indicates the overbought condition, suggesting a potential selling opportunity. The advantage of that, it's a simplicity. The strategy is straightforward and based on well-established statistical principles. Adaptivity, applicable across various markets and time frames. Volatility insight. Bollinger Band adjusts to a market volatility, providing dynamic support and resistance levels. There are disadvantages also. Trending markets. The strategy may underperform in strong trending markets where prices continually move in one direction, reverting only to the mean. False signals. Sudden market movements can lead to false signals. Combining Bollinger Band with other technical indicators can help filter these out. The strategy number 2, price breakout strategy using volatility and RSI confirmation. This method combines volatility, price action and RSI to identify opportunities with precision. We can use RSI as a support to this technical decision making. Here, first I use the divergences. You can see how the divergence is acting in this situation. We have discussed RSI divergence in our earlier video. So I think you have familiar with these divergences. Step 1. Identify a ranging market. Key features. Look for market that is relatively flat with a low volatility. The simple moving average line should appear flat or slightly neutral. 3. The two volatility bands must be close together, indicating a consolidation. Watch for the volatility expansion. When the market is ready to break out, the standard deviation lines or Bollinger Bands will start to expand, resembling the opening of the mouth. This signals an impending directional movement. The step 3. Spot the breakout candle. Mean when one candle breaks out of the band in a specific direction, it is a sign that the price action might begin a strong move. Important thing to this, a breakout candle alone isn't enough to confirm the trend. Now I am taking RSI to this confirm. Use the relative strength index to validate the breakout direction. If the RSI crosses above the 50 level and is heading upward, is signaling a bullish trend. If the RSI crosses below the 50 level and is heading downward, this signals a bearish trend. Now let's summarize the 5 steps combining everything. Wait for the breakout candle in a ranging market with expanding SD bands. 2. Confirm breakout direction using RSI behavior around the 50 level. Enter the trade only when the both price actions and RSI align in the same direction. At the end of the 50 level criteria, now I am using the divergence. You can see while the price is to downtrend, the oscillator indicates upward. Definitely the next action is uptrend. Here you can say hyper uptrend. In this chart the same. The price pattern is upward while the oscillator indicates a downtrend. So the next step is a downtrend in the prices. Now we are going to the strategy number 3. Exit in the rally market. Little difficult point. The key concept here, the behavior of the rally market. In a continuous rally market, the price typically fluctuates between upper band and the middle band of a Bollinger Band or similar indicator. The market appears strong, but a shift in momentum often signals an upcoming reversal. Now our next thing is identifying the downtrend signal. For that, watch for a strong momentum candle that breaks below the middle line of the band. This breaks out often signals a weakening rally. The movement towards the lower line, when the price moves toward the lower band, it is an alarm for the potential downtrend. Now we can do a confirmation and the next action. After the breakout, wait for next candle to confirm the downtrend. If the next candle continues to move downward, it is advisable to exit your current long position. Consider short entry to take advantage of new trend. Now I am going to put what I told you just now to a chart. In this actual chart, you can see here this is a continuous downtrend. In a continuous downtrend, price only moves up and down within the range middle line and the lower line. In this point, now I am going to confirm what I brought to you. Here a momentum candle start to cross the middle line. It comes from the down line to up, and it is confirmed by the second candle to a upward movement. So it's a hyper trend upward. After a continuous uptrend, we can identify the uptrend by seeing prices tolerate only between upper band and the middle band. But here, a momentum candle moves through this middle line to downside. It is a confirmation to a next downtrend. Strategy number 4. Entry in a distribution market. Now we are going to cover a powerful strategy to identify entry points during a distribution market. In a continuous downtrend, timing your entry correctly can maximize profit when the market shifts directions. Let's start now. Understand the distribution market. In a continuous downtrend market, price typically oscillate between the lower band and the middle band of the Bollinger Band. The breakout above the middle line can indicate a potential trend reversal. To identify this point, be alert on the breakout point. Look for momentum candle that break above the middle line of the band. This is the first sign of a potential trend change. We have to wait for the next candle's confirmation. If it's continued upward, that means its trend is uptrend. To this, we can use the supporting indicators such as SMA 20 to identify the trend and RSI. In this chart, you can see downtrend, up and uptrends and the points of trend change. Here, RSI goes through the 50 line heading up. At the time, Quizzes opened his mouth. So, using this strategy, we can easily identify the trend of the next candle. And in this situation, you can see a hyper uptrend of prices. Now we are in a topic which is needed your more attention. Let's start to discuss the types of breakout patterns and how to recognize them during market quizzes. Identifying these patterns can help you predict explosive price movements and make better trading decisions. Let's dive in. Breakout patterns are powerful tools to identify market quizzes and potential trend reversals. By understanding these 6 patterns, you will improve your trading decisions and timing. Pattern number 1. It is slide band breakout. In a slide band breakout, the majority part of the candle body remains inside the band, indicate a moderate shift from the current quiz into a potential boom. This is often cautious breakout, signaling a gradual build-up of a momentum. Watch closely and get a confirmation by these charts. This point, a slight breakout, slowly going up. Now I think you have understood it. Now I am going to the pattern number 2. Pattern number 2. Here is extremely different. Majority of the candle's body break out the band. It represents a hyper explosion, signaling end of a current quiz. Often occurs at extreme overbought oversold levels. Be prepared for high volatility and potential reversals. Now I am taking a chart to make you clear. Here the point is very clear. In this candle, a majority part of the candle is out of the Bollinger Band upper line. So it's a hyper upward. Within a small period of time, it has given us a massive profit. Identifying these type of points are very important you to get benefited from this trading. Now I'm going to the next one. Again you can see a point, a downtrend. Now I'm going to the pattern number 3. Breakout at a key level, support level. This occurs at a key price level, triggering an accelerated upward price movement. Signals the end of a current quiz or trend reversal. Provide a strong indication of new trend beginning. Use this pattern to catch early entries in new trend. I'm taking a one in this chart, a support level. Here, this supporting level. In this quiz opening, you can have a support. Because of this support and the RSI 50 cutting, the moves this up in hyper speed. You can get good benefits if you identify this thing in advance. Now we are going to the pattern number 4. Breakout at resistance level. Price breakout at resistance levels and ends the quiz or trend with a steep downtrend. A clear sign of sellers dominating the market. Be cautious when you watch for confirmation candles. This is the resistance levels. This squeeze breaks out, touching the resistance levels. This RSI also gone down at a high speed, so the prices come down. Be careful in these type of situations. One by one, we have come to the 5th. Breakout at resistance level turn to a support. A breakout occurs at a support level, which is earlier a resistance level. If in this time expansion occurred, you can definitely see a hyper uptrend. Now in this chart I have brought to you, you can easily see that in this level it is a resistance. Now it converts to a support here. See what has happened. To today's video, pattern 6 is the last. Breakout at resistance levels turn to a support. If a breakout occurs at a resistance level, which was earlier support level, in this situation you can see a steep downtrend. It's a very bearish domination. Now in this chart, it is very clear. Previous support levels, very good support, converting to a resistance. In this situation, if a explosion is occurred, definitely the price moves down in a hyper speed. See what has happened. I hope to meet you in our next video on the topic candlestick patterns. Don't forget to like, share and subscribe for more actionable trading strategies. Let me know in the comments which breakout pattern you have seen more success with. Thank you for watching.